ESG and ESGC. My name is Taylor Bilbrey, and I am today's moderator. If you are just joining us, please go to the chat and introduce yourself with your name and the region you represent. And as a reminder, this office hours session is being recorded for public record. Office hours recordings are on the California ESGCV Past Trainings webpage. A copy of the slide deck and the recording will also be emailed to you. Next slide, please. How to ask a question. All questions must be submitted in the chat box. Please type your organization and your question into the chat box, and the team will read questions out loud at the end of the presentation. And if possible, we'll provide answers throughout the presentation. All questions and answers entered into the chat box will also be recorded as part of the public record. Alongside our presenters, we have several HCD staff, including ESG representatives, ESGCV administrators, and other consultants who are able to answer questions during the Q&A session. Next slide, please. Today's office hours session agenda includes ESG updates and resources, ESGCV updates, office hours updates, upcoming trainings, ESGCV question and answer, and a spotlight series presentation on financial record keeping. Next slide. And with that, I will pass it to Connie for some ESG updates.
Thank you, Taylor. Good morning, everybody. Just a reminder, we've talked about this in the last couple of office hours, but we will be issuing a one-time special homelessness prevention NOFA under the ESG annual program. This is $1.7 million in disencumbered funds from the 2020 allocation. So it's the only activity offered under this NOFA. Our plan is to issue it and an application in September of 2023, so just a couple months away. Funds for this funding will expire on September 7th of 2024. And this will be over the counter. So once we release the NOFA and the application in September, it will be first in, first reviewed, and we will make an award and get you a contract so you start spending this homelessness prevention funding. Next slide, please. Want to also just mention that everyone that applies must have HCD approved homelessness prevention policies and procedures. Now, if you don't, and you're interested in applying for this, please reach out to me or reach out to the ESG NOFA inbox, and we'd be happy to send some information to you. There are our homelessness prevention policy manual and checklist on our ESG webpage if you want to meet and talk more about it. If you're not sure how to draft those policies and procedures, we're here to help. I've already have a couple meetings scheduled in the next couple of days with jurisdictions that want to talk more about it. So if you don't have those already prepared, don't let that stop you if you're interested in running a homelessness prevention program. And again, ESG NOFA inbox, if you have questions, we're in there many times throughout the day and we will respond as quickly as possible. Next slide, please. ESG guideline development. We are developing guidelines that will replace the current ESG state regulations, and we plan to have those issued mid-2024, so about a year away. So we're working on that right now, but we need your help. We want to hear from you and get feedback. We're doing this currently through a SurveyMonkey that was sent out on July 12th, and we've been getting results in daily. Thank you to everyone who's responding. It's very helpful to know what you're thinking and to help us shape these guidelines that will carry us forward starting in 2024 for the ESG annual program. The listening sessions. Next slide, please. We have 3 listening sessions already scheduled, and we'll show on the next slide the dates, but actually the one for this afternoon begins at 1:30. It was targeted for Northern California, but you know, anybody can register. It's through a Zoom. It's a Zoom meeting, Zoom registration. And we also have one scheduled for next Wednesday, which is August 2nd, and the following week, August 8th. We wanted to try to keep these fairly small so we can let you come off mic and have an interactive conversation. So again, we're trying to get out there and do as much outreach and get all your feedback. Could I get you to go back just one slide for me, please? Also, just want everybody to be thinking, you know, and maybe you're wondering, well, why go to guidelines? We have these state regulations we've been operating under. Well, we have 4 main points, 4 main goals of why we want to implement guidelines. One is to speed up the deployment of funds, of these ESG annual funds to you. So you have the full 24 months to expend your grant. When HUD signs our annual grant agreement, the clock starts ticking and we have 24 months to expend those funds. And currently under our process, we don't always get that, you don't always get that 24 months. So that is one of the main goals of going to guidelines. We eventually want to award funding based on performance outcomes. For example, access to permanent housing and so forth. We are proposing the first 3 years or so we'd stay within formal allocation. Maximize flexibility. We want to be able to be more nimble and flexible, and guidelines allow us to do that. And lastly, we want to reduce the administrative burden on you, our recipients, and us. Again, it goes back to deploying these funds as quickly as possible so you have time to spend the money and to get your programs up and running and be successful. And next slide. Again, don't forget all the listening sessions. If you haven't seen these come through in an email, then reach out to me, reach out to the note box, and we'll get you a link. Next slide, please. And also next Wednesday, next office hours, not only on August 2nd do we have a listening session, but in the morning, we will be talking in more depth about our guideline development. So that's next Wednesday. We have created an ESG guideline inbox for everybody to write to. If you can't attend any of those listening sessions, or please, feel free to drop us a line in ESG. We want to hear from you. Thank you, and I will turn it over to Anthony.
Thank you, Connie. And just some quick reminders for everyone. The 2022 ESG award announcements. The contracts are currently routing. They are being sent through one by one to legal and finance, and they will be approved one-on-one. I've seen a few come through the wire, so you will be receiving a notification if you're awarded 2022 funding for ESG. You'll be receiving notifications soon on your contract status or standard agreement status. The 2023 ESG annual NOFA is still scheduled to be released in August. We will be scheduling webinars for those as well once the date is announced. And a reminder that we are quickly coming up on August. In the 2021 contracts, the expenditure date is August 31st, 2023. So make sure to give us a call or send us a note via email if you need some assistance there, or have any questions about the status of your funding for 2021. Next slide, please. And just a reminder of the policy documents. Last week, we highlighted the new updated subrecipient program manual for the ESG program. Once again, want to highlight that. We will be sending that out via email, a mass email as well. We really want to make sure to get that in the hands of our grantees and their subrecipients. It's a very helpful document. Next slide, please. And of course, we are back to full strength. Sam is back. I got them listed on there. Those are your ESG team representatives. There's always the ESG NOFA inbox. If you have a general question or can't get in touch with your rep that day, they might be on vacation during this time of year. All the information's there. We're happy to reach out and respond to your questions anytime. And next slide. And now I'm turning it back to Taylor.
Thank you, Connie and Anthony, for those ESG updates. We now have some ESG CV updates, reminders for performance milestones. All program funds for projects such as street outreach, emergency shelter, rapid rehousing, and homelessness prevention must be expended by September 30th, 2023. And all funds for HMIS and administrative costs must be expended by October 31st, 2023. And final requests for funds, RFS, must be submitted to the department by November 15th, 2023. Next slide, please. We have some HCD office hours updates. Upcoming office hours topics include ESG guidelines listening session on August 2nd. And on August 9th, we have an invoice review clinic. Next slide, please. We have some new HCD office hours training links, and we will have those pasted in the chat below shortly. And you can access those also in the slides once they're sent out. Next slide, please. We have some upcoming trainings for July. July 31st, we have a coordinated street outreach and encampment best practices community workshop. And in this training, we'll look at the role outreach can play to identify, engage, and support people in encampments on their pathway to permanent housing. And we'll share examples of effective outreach strategies and alignment of coordination efforts as a more impactful response, and review emerging best practices. And you can register to join in the link that will be pasted in the chat as well. Next slide, please. And at this time, if there are any questions, please put them in the chat. And you may continue to put those questions in the chat throughout the presentation. We will pause for any questions. I will check our chat. All right, no questions at this time. Next slide, please. And if you do have further questions, please contact us using the ESG NOFA at hcd.ca.gov Gmail for your annual ESG questions. And for ESG CV questions, please reach out to your grant administrator. Next slide. And at this time, we will turn our attention to today's Spotlight series, Financial Record Keeping with David Munoz. Thank you, David.
Thank you, Taylor, and good morning. As she mentioned, my name is David Munoz, and today we will be going over our favorite topic, financial record keeping. Next slide, please. So why are we here today? One simple way to think about it is if you were to win the Mega Lotto this Friday, as much as I'm sure we all love doing what we do, odds are you're not going to show up to work on Monday. And so what does the individual that is left with filling in your shoes do? Can they tell the story of how your agency utilized its funds and demonstrate that they were done in a compliant manner? So were they allocable, allowable, necessary, and reasonable? And so that is really what our goal today is. And we'll go through that, continuing with the next slide. In terms of HCD's financial documentation requirements, both ESG and ESGCV grantees or subrecipients and their sub-subrecipients are required to maintain sufficient source documentation for all costs that are charged to the ESG or ESGCV programs. In order to be reimbursed for any of those costs tied to the ESG or ESGCV activities, the grantees and subrecipients are required to submit samples of backup documentation with their reimbursement request. For detailed guidance, I know there's slightly different processes for ESGCV when compared to ESG. For ESGCV, you'll refer to the RFF workflow for subrecipients, which lets you know that based on each activity component that you are charging costs to, we're seeking reimbursement from, you'll need to submit supporting documentation for one line item. And then for ESG subrecipients or grantees, you'll reach out to your annual representative for additional details. And I believe they're kind of naming that the mini monitoring, which again is a sample or spot check of the supporting documentation that you all are maintaining. Now, while both of those processes require you all to submit samples of backup documentation, it's really meant to test your practices, your financial practices, but it should be known that you are still required to actually have that backup documentation for 100% of the costs that you all are seeking reimbursement for. Next slide, please. And so why does HCD require you all to maintain supporting documentation? And it's really not HCD, but rather HUD, which is the funding agency. And there's two regulatory citations that you all may want to keep handy. The first is the programmatic regulations. So the ESG regulations at 576-500U summarize the requirements for financial records. And those can really be boiled down to these 4 points. So first is retaining all supporting documentation. So even though you're not submitting 100% each time you're submitting an RFF, you are still required to have that readily available should you need it, or in the event of a monitoring by HCD or HUD. The second is you'll want to make sure that that supporting documentation demonstrates that all costs were allowable costs under the specific activity components that they're being charged to. Third is any records of program income, if that's applicable. And then fourth is compliance with any expenditure limits and deadlines, such as administration expenditure limits and so forth. And again, all 4 of these components together are what enable you to be able to tell that story of how your agency utilized those funds, why it was necessary, why that cost was necessary, demonstrating that it is allocable to that activity component, and then being able to tell that story to your local constituents, stakeholders, to HCD, to HUD, and then obviously Congress. Next slide, please. The second regulatory citation that we'll kind of point you to is 2 CFR Part 200. And this, the uniform administrative requirements really outline what is needed with respect to financial source documentation. And specifically, you could look at 2 CFR 200.302, which is specific to financial management practices. And it indicates that all of your supporting documentation or financial records must identify the source and the application of funds. In this case, we know that if you're seeking reimbursement from ESG or ESGCV, that is the source. And then the application is which activity component and what did you purchase that was necessary, or what did you spend money on that was necessary for the implementation of each one of those specific activity components. So again, it's telling the story with your financial records. The second is 2 CFR Part 200, Subpart E, which is the cost principles. And this kind of guides subrecipients and grantees on how to document which costs are allowable and ensuring that you're effectively administering the ESG and ESGCV award. Next slide, please. And so in terms of documentation standards, I think one of the biggest frustrations for grantees as well as subrecipients is always, well, tell us exactly what it is that you want. And for HUD, they've always kind of reframed this as, we can't necessarily point you to a specific document every time because each agency does things slightly differently. The key when determining whether or not your agency's financial management process or practices are really hitting that benchmark is whether or not you can answer these questions. So what was the itemized cost? What did you do? When did you do it? And how did you choose to do it? So again, you're telling the story. What did you purchase or what did you pay for? Well, we paid for the salary of employees to manage the rapid rehousing program from June 1st through June 30th. And this is what they were responsible for doing. Or we paid for the rent for this beneficiary during, the month of June, and this is how much it was. And so again, you're putting that story together, and there's various pieces of information or documentation that you'll need along the way to be able to track that story. Next slide, please. And so one way to think about it is through a high-level checklist. And so you'll notice here there's kind of a five-prong checklist, starting with your standard agreement, the request for funds, direct personnel costs, direct non-personnel costs, and then your indirect cost rate or indirect costs. So with the standard agreement, you'll want to make sure this kind of establishes what your budgets are. And so when you're seeking reimbursement, you want to make sure that all of the costs as well as the amounts charged to the program are part of that agreement with HCD. For you all that have a standard agreement directly with HCD. And likewise, for you all that have any subrecipients, you want to make sure when you're reviewing any reimbursement requests that they submit to you, to make sure that that's part of the agreement or contract that you have with them. The second is that request for funds. And again, for ESG and ESGCV, HCD has provided one that has some formulas embedded in it. And so that cover page will contain a summary of the amounts that have been requested for payment by activity component for that pay period. And while you're required to submit that to HCD, it's also important to note that if you as a grantee or subrecipient have subrecipients below you or a sub-subrecipient, you'll also want to utilize a similar form that does contain that summary of the amounts, what are the budgets, how much has been requested before, what is this current request, what is remaining by the activity component for the pay period. The third is your direct personnel costs. So that is for any employees that are working directly on any one of the eligible activity components. And the way that you're able to demonstrate the amount that's allocable is with timesheets, payroll reports, pay stubs, or other proof of payment. The fourth item is the direct non-personnel costs. And so this is any goods or services that are necessary for you to implement this activity or any one of the eligible activity components. And that would be supported by procurement records, invoice, receipt, or other proof of payment. And then the fifth and final piece is the indirect cost rate. For a majority of you, if I recall, most are utilizing the de minimis method. However, some of you do have a negotiated indirect cost rate agreement. And really the key here is just ensuring that the indirect cost rate is applied in a manner that is consistent with the methodology that your agency has selected. So if you're utilizing the de minimis, you are applying that 10% plus up to your modified total direct costs. If you have a negotiated indirect cost rate, it's whatever that percentage is that was approved by a cognizant agency multiplied by your direct cost base to arrive at what that indirect cost amount is. Next slide, please. And so we'll kind of go through each one of those items in the checklist and give you examples. As I stated earlier, we know that each agency has different ways of doing things, and the documentation may look a little bit different. And so it's really about what is contained, what information is in those documents, and making sure that it at least contains the minimum required information. So the image on the left should look very familiar to many of you, as this is the budget within your HCD standard agreement. And you'll notice there's three key pieces of information. So this budget is broken down by activity component, the allowable costs or amounts within that activity component, and then the total award amount. So all the way at the bottom, it tells you what your grand total is. On the right, you'll see a couple of different examples of what that could look like if you had a subrecipient. So you'll notice both of those look different. However, it still contains the necessary or minimum required information. So it's telling us, what is allowable cost under the agreement. So you've got personnel in one example, you've got motel vouchers in the other. How much can be spent on that specific line item under this activity component? So for personnel, salaries, and benefits, you could spend up to $129,512. Whereas on the other example, you could spend up to $36,208 on hotel motel vouchers. And then again, we have the grand total for all of those line items at the bottom. And so that is your do not exceed essentially. And so as you go through the program year or the grant cycle, you're measuring progress in comparison to that budgeted amount by line item as well as the total grant. And so this becomes kind of your starting point or the foundation for how you end up, what types of costs you end up charging, as well as how you end up charging those costs or seeking reimbursement for them throughout that grant life cycle. Next slide, please. So the second piece was the request for funds. Again, this form should look very familiar to many of you. And this, while we're presenting the HCD request for funds, when you all have subrecipients, you'll want to utilize, it doesn't have to be this exact one again, but something similar where it's capturing this same information. So the first is the reporting period. When are these costs being incurred? So from start to finish, what are you seeking reimbursement for what period? The second is a summary of your approved budget amount by activity component. And again, this stems from your standard agreement, which is why we wanted to start there because that becomes a foundation. And it'll give you a summary of your expenditures based on what was previously drawn, as well as what you're seeking to get reimbursed for on this, this current request for funds. And then that allows you to understand what you have remaining. And then third is ensuring that it's signed by authorized personnel. Usually that's in a certification resolution stating who's authorized to either submit the application in response to the NOFA, who's authorized to sign agreements, and who's authorized to sign requests for funds. This sheet in particular, this form, has a component or has tabs for each activity component. So you'll want to make sure that you're selecting the correct activity component tab, namely because if your standard agreement with HCD only has a budget for street outreach and for administration, if you click on emergency shelter and you're seeking for reimbursement on that, HCD won't be able to approve it because they're going to let you know, hey, you don't have any budget for emergency shelter. So you'll want to make sure that you're selecting the appropriate activity component. And the beautiful thing about this request for funds form is that it actually lists out all of the potential allowable costs under that activity component. You'll identify which one of those allowable costs you're seeking reimbursement for. You'll enter a description of that expense during that reporting period, and then you'll enter the total amount that you're requesting to be reimbursed for. Now, again, this form can change in the way that it looks, and you'll want to be collecting this type of detailed information from your subrecipients so that you can then also cross-reference, okay, we have an agreement with you for rapid rehousing. You said you were going to utilize it on hotel motel vouchers. So why are we spending all of it on transportation? That's a conversation that then needs to happen. But the only way that you're able to have that conversation or be able to reconcile what they're requesting versus what was approved is if you're obtaining this level of detailed information from your subrecipients so that you can then compile, accumulate all those costs, and then submit to HCD. Next slide, please. So then the third piece of that checklist was documenting personnel costs. Again, this is for any employees that work directly for your agency. as well as if your subrecipients charging personnel costs, they're going to be held to the same standard. And so when you're reviewing their request for reimbursement, you'll want to have these same standards of documentation, because should HCD or HUD come out and monitor, if 100% of your activities are being implemented by subrecipients, well, then your subrecipient supporting documentation becomes your supporting documentation. And so the more you're able to ensure that they're complying with these requirements and demonstrating effective use of these funds, the easier it becomes for you to get through that monitoring, and you're not looking like the Home Alone kid freaking out. So we broke this out into kind of two components, if you will. The one on the left is what you would submit should you choose to submit supporting documentation for personnel costs as part of your RFF. So under ESGCV, you have the option of selecting one line item. Should you choose personnel costs as your one line item during the RFF, you'll need to submit timesheets for each employee that worked on the ESGCV program or whose salary you're seeking reimbursement for. And those timesheets should account for all of the hours worked during the week or that pay period, and specifically identify the number of hours that they worked directly on each activity component by funding source. And then they must be signed by the employee and immediate supervisor. And so the reason why this is important is, are personnel costs allowable? Absolutely. But the amount of their salary that is allocable to the program is based on their timesheets. So if they're working 80 hours in a pay period, but only half of that time is spent on the ESGCV program as documented in their timesheets, then 50% of their salary and benefits could be charged to the ESGCV program or ESG program. But absent those timesheets having that level of detail, it's very difficult to tell what portion of their salary is actually allocable to the program. And therefore, it's difficult to tell whether that's a reasonable reimbursement. Then the second piece is your payroll report. And this is kind of a summary of the number of hours worked on the ESGCV activities by all employees multiplied by their respective hourly rate. And then that would total the amount that you're being requested or the amount that you're requesting for reimbursement. Now, at the time of monitoring, when there's a much more thorough review, you'll want to make sure that everything is laid out in your general ledger. And so we'll ask for a chart of accounts, ask for you to identify, okay, how are you determining HCD ESG's CV award? How are you tracking that? Are you tracking it by activity component? And then under that activity component, what are the allowable costs? And you should be able to create a tie between all of those costs and the documentation that you have to support it. And it should reflect all of the revenue as well as the expenditures by activity and funding source. And then you'll need the proof of payment. So if you're still issuing checks to pay for your employees' salaries, we'll need copies of those canceled checks. If you all are doing electronic wire transfers, generally what you'll see is in your bank statement, it'll be a lump sum amount, we know that, but you'll generally get a detail of that payroll report, and it should be able to say, hey, a portion of this was for these employees that worked on the ESG program. And so the bank statement should be able to reflect that. The last piece is if you're charging benefits, you'll want to have those benefits agreements readily available, and it should reflect the employee's distribution. And the reason why that's important is, different agencies cover different benefits, as well as depending on how long you've been working at the agency, or sometimes even the age of the employees may influence the distribution of those benefits as well. And so making sure that the amount that's attributable to that specific employee and demonstrating that it's tied to an agreement is also important to make sure that we're not just kind of covering a percentage of all benefits that your agency is doling out, but rather the specific amount to that employee. Next slide, please. So as I mentioned, the timesheets are extremely important to determine the amount that is allocable to the ESG or ESGCV award. And so timesheets, while they may take different shapes, forms, looks, etc., they should contain 4 key pieces of information. So the first is the period, so start date as well as end date, and it should coincide with that employee's pay period. So whatever is on their check, it'll have a start date, end date. The timesheets should match with that period. The second is it should show all hours spent by funding source and by activity. And so you'll notice here, let's say, we're starting from the top on Monday all the way through for a couple of weeks. It may be that a portion of their time is spent on ESGCV. Let's call that funding 1. That's where they would note the number of hours they worked on the ESGCV program. Let's say your agency receives another funding source. We'll call that funding 2. That's where they would note all the hours that they worked on that funding source and that program. And in the comments section, you can add some detail about what it was that they worked on. Let's say they're working on rapid rehousing and homelessness prevention. In the comments, you can add some detail, like under ESGCV, they work for rapid rehousing. Under funding 2, they worked on homelessness prevention. And then that way we're able to determine, okay, all the hours under column 1 or funding 1, which is ESGCV, if we were to multiply or add those up, get the total, multiply it by their rate, it should equal the amount that you're seeking reimbursement for. And then the third piece is making sure that it actually reflects 100% of the hours that were worked during that pay period. So it's not sufficient to just have funding 1 filled with your ESG hours. Let's say they were working half-time over 2 weeks. Let's say funding 1 column sums up to 40 hours. But on their payroll register or payroll reports, we see that they worked a total of 80 hours. If the timesheets aren't matching with the payroll reports and payroll register, that's an issue. It means that these timesheets aren't reflecting all of the actual hours worked during that pay period. So it's difficult to discern whether or not, number 1, these timesheets are accurate, and number 2, whether or not it's truly tracking the allocable amount to the ESGCV or ESG program. And then 4th is ensuring that they're signed by the employee and their supervisor. If you all are utilizing an electronic system, most electronic systems should have a method of having a checks and balance. So when the employee submits it, do they certify it? Is it time-stamped in the system? And then is there a supervisor that's reviewing and approving those timesheets? And is that, if it's a checkbox, does it say who checked it off and then when they checked it off? So there has to be some level of internal controls here. But so long as your digital or online or electronic timekeeping system has that capability, then you should be okay. Next slide, please. Then for a personnel payroll report, again, this becomes your summary of all of the personnel costs for that pay period. So let's say it's the month of June. You'll sum up all of your employees' timesheets. And for each one of these line items, you could put just the employees that work directly on the ESG program. Let's say you had 3 employees. You'll fill out those first 3 line items, what their total hours on the ESG CV program were, multiplied by their rate, should equal that total amount that you're seeking reimbursement for in terms of personnel costs. And again, these are samples. So it doesn't have to be this exact form. We know that a lot of your agencies already have these types of tools in place, and it's just a matter of making sure that it's capturing this information. So the total hours that they worked on the ESGCV program for that pay period, what that total loaded hourly rate is, and then the total at the bottom, or number 3, should equal the amount that you're entering into that line item in the RFF form. Next slide, please. And then you'll have personnel payment or encumbrance. And again, this will take different shapes, forms. In this case, we have on the left, we have an example of someone that's still issuing checks. And in that case, we'll be looking at, the pay period for that check, the amount for that check, verifying that this was delivered specifically to that employee. We'll verify their hourly rate as well as their total hours. And again, all of this information should be tied back to the timesheets. So if we're reviewing timesheets for October, then we would be looking at this check for October. We'd look at the timesheets. Oh, did they work 80 or do the timesheets reflect 80 hours? Perfect, because the payroll register reflects 80 hours. Did they say their rate was $20.91 on the payroll report? Perfect, because their pay stub says their rate is $20.91. And then what that total amount is would also be reflected on that payroll report. And then the third piece on that pay stub, that's information, is the benefits. And so you'll see, if they're just doing Social Security and Medicare, those should equal the amount in benefits that you're seeking reimbursement for. And then lastly, you've got the kind of payroll services from QuickBooks as an example, which demonstrates that there was a direct deposit or a wire transfer to a specific employee, and then that amount may be more or less, but that total amount should equal the total number of hours that they worked as reflected on their timesheets, multiplied by their rate. It should equal that total direct deposit amount, even if only a portion of that is being allocated to the ESG-CV award. And that would, again, be determined based on the timesheets. Next slide, please. So now we're on to the third piece of the, or actually fourth piece of the checklist, which is documenting non-personnel costs. And again, it's still broken down by those components. So should you choose to submit supporting documentation for a line item that is a non-personnel cost, so if it's a good or a service, at the time that you submit the RFF, you'll want to submit the invoice or the receipt, and it must clearly show the costs that were incurred for the ESG-CV activity. So it should be an itemized receipt or invoice, and it should tell you the quantity, what the cost per unit is, and then what the total is. And then at the time of monitoring, you want to make sure that all of your procurement records are in order. And those procurement records should demonstrate that the goods and or services were procured before completing the purchase. And so I think we kind of discussed this about a month ago when we had the procurement office hours in terms of the date that procurement occurred and the date that the purchase occurred. And you want to verify that the good or service that you're purchasing or intend to purchase is reasonably priced. And the only way that you can do that is by carrying out a procurement action. When you do that, you're able to then determine who the most reasonably priced vendor is, and then you complete the purchase. And so having those records in order is extremely important. And then the second piece there would be the proof of payment. So this is very similar. It's a copy of the canceled check or those bank statements. Next slide, please. So to touch a little bit on, just have a refresher on the procurement piece. There's really informal, two kind of primary methods. It's informal or formal. And the first two that you see here, which is micro purchase and small purchase, would be considered informal because there is no requirement to publish or advertise in a newspaper of general circulation. Whereas the formal procurement would be for sealed bids or competitive proposals. And you'll notice here we've written down what those thresholds are. So if you intend to purchase supplies that is equal to or less than $10,000 in the aggregate, you can utilize a micro purchase procurement. And if you carry out that action prior to making those purchases and you have it documented, you're in a good spot. Now, if the goods and or services that you're purchasing exceed $10,000 but are less than or equal to $250,000, a small purchase procurement would be the action that you want to carry out. And again, you want to have that documented that you went through that exercise before you made the purchase. And then the final one is a sealed bid or a competitive proposal. So things like an RFP is really required for anything, any type of good or service that you're purchasing that will be over $250,000 in the aggregate. Next slide, please. And so for a majority of you all, I'd imagine you're probably dabbling in the micro purchase or small purchase procurement most of the time. So that $10,000 to $250,000 range. And here we have two sample forms. So the one on the left is for the micro purchase, and then the one on the right is for a small purchase. So for the one on the left, which is the $10,000 threshold, there's three key pieces of information here. The first is your shopping cart. And so you're listing the items or the description and specifications of the supplies, goods, or services that you intend to purchase. And it's super important that you're describing this in terms of the functionality. So we're talking a computer with Wi-Fi, with a camera, with a microphone, with certain RAM space, rather than an Apple MacBook Pro. So we want to talk about specifications so that when we're identifying potential vendors, which is the second key piece of information here, we're able to compare apples to apples. So does Best Buy, does Office Depot, does any other vendor within your region sell a computer that meets those specifications? Whereas if you're just specifying a MacBook, there's only one provider of that. And so you've really eliminated competition in that scenario. And that's precisely what this exercise is meant to prevent. We want to foster competition and ensure that we're able to pay a reasonable price for a good and ensure that that good is necessary to carry out one of the eligible activity components. Once you've identified your vendors, you'll want to make sure that it's signed and dated. And again, that's super important, that date, because if that procurement date is after you made the purchase, the procurement is, not up to par. If it happened before the purchase was made, then you're good, especially because you'll then be able to demonstrate, hey, we purchased it from the vendor that was the most reasonably priced. The one on the right, very similar process where the first item or the first thing that you should be focused on is your basket of goods, your shopping cart. What is that item? What are the specifications? Then you'll obtain, whether it's written or verbal, quotes from qualified vendors in the area that can provide that good or service. And then you'll list what their quote was in total on that second or third column, no, like fifth column. And then again, the third piece is when it was signed and dated and ensuring that that exercise was carried out prior to entering into a contract or completing that purchase, issuing a purchase order. Next slide, please. So then after that, you'll want to make sure that you're maintaining documentation such as an purchase order, invoice, or receipt. And so again, these will look different, especially when you're dealing with vendors that have a variety of specialties. Each one's going to do things their own way, which is fine. It's just a matter of making sure that that invoice, purchase order, et cetera, has the necessary information. And so number one is, when was it ordered? And that's super important, again, because we're going to look at that date. We're going to look at your procurement records. Does the date on the procurement document predate the one on the invoice? Yes? Okay, we're good. Let's go to the next step. Number two is, does it have an itemized list of what was purchased for the ESGCV program? And so it should have a description, it should have the quantity, what the unit price is, and then what the total price was. And so you'll notice, even though both of these look a little bit different, it has that level of detail. And then the third is what the total purchase price was. And this is super important because sometimes you'll have credits or discounts. And if you have a discount, then the total amount that is, eligible for reimbursement is what the order total was minus the discount. So we don't pay for the total price and then you get to keep that discount amount. That's not the way it works. And so making sure that it reflects that. And then if you are, purchasing multiple items, only one or two of which are being utilized for the ESGCV or ESG program, you'll want to have that noted down somewhere to say, hey, we purchased 5 toner cartridges, but really only one was for ESGCV. And so we'll take the quantity multiplied by the unit price. And then that is what becomes the allocable amount to the ESGCV program. Next slide, please. And then again, this kind of traces it through payment or encumbrance. So you'll have your payment requests, which is kind of your internal process there. After you get the invoice, you'll want to make sure that there's some type of internal controls, that somebody within your agency reviewed what the payment request is for, how much is it for, it was approved, when it was approved. And so at the bottom, you have that internal control level as number 1. Number 2 is it's still creating that tie back to the invoice. And so it lists the invoice number as well as the description, so we can kind of create that tie. It has the quantity, the unit price, and the amount, and all of that is matching, so we're good. Then we'll go, if you're still issuing checks, we'll go over to the check. We'll verify, okay, is that the same vendor or was that check issued to the vendor? Okay, what was the amount of that check? Does it match? If it's an itemized type situation, such as it is here, you'll notice that we've highlighted that specific line item that is applicable to ESGCV so that we know, hey, yeah, this check is for $3,000, but only $124.54 is allocable to the ESG or ESGCV program. After we have all of those pieces of information, you want to make sure that it's being recorded in your accounting system. So if you're utilizing a QuickBooks type system, you'll notice that it has this broken down. This would be the ESGCV account. Under non-personnel costs and operating supplies, we'll go to that line item. We see $124.54. It's referencing the check as well as the invoice. It has the date, which matches the date that it was approved for payment based on this payment request form. And so now we're able to track that story all the way back to the moment that you decided, hey, we need this piece of, this good or service. What is the way that we can get the best value for it? So we did a procurement. Then we got an invoice. We requested payment. It was approved internally. We issued a check, and now it's being reflected in our accounting system of record. Next slide, please. And so the last item on that checklist was indirect costs. So we're now on the 5th item there. And to calculate indirect costs, it is your modified total direct costs multiplied by your indirect cost rate, which is expressed as a percentage, and then that equals your indirect cost amount. And so one of the biggest kind of hiccups here is assuming that modified total direct costs is synonymous with all costs. So this formula here does not say your grant amount multiplied by your indirect cost rate, whether that's 10%, 15%, whatever, equals your indirect cost. It says modified total direct costs. And so it's very important to have some sense of what modified total direct costs are. And there's a really good resource in the ESG Indirect Cost Toolkit. And it goes through each activity component and it creates a table for you and says, this is a modified total direct cost. This is not a modified total direct costs. And so you'd sum up all of your modified total direct costs. You'd multiply it by your rate. If you're utilizing the de minimis, which is 10%, you'll multiply that modified total direct cost amount by 10%. And then that will give you what the indirect cost amount that you can get reimbursed for is. And so next slide, please. Just to kind of give you a high level look at what are modified total direct costs and what are not modified total direct costs. The box on the left, which is green, are modified total direct costs, or MTDCs. And then the box on the right, which is red, are not treated as MTDCs, meaning any type of cost on the left box would get multiplied by that percentage. So if it's de minimis, anything in that box would get multiplied by 10% per reimbursement request. Anything on the box on the right gets excluded from that calculation. You're just getting reimbursed for that cost. You're being made whole for it, but you're not getting any plus up in terms of indirect costs. So you've got direct salaries, wages, fringe benefits. So all of your personnel costs, MTDCs. Any supplies, materials, so anything under, any good that is under $5,000 per unit, that's an MTDC. If you're paying for services, that's an MTDC. Travel, and then up to the first $25,000 of each subaward. So if you have subrecipients, and let's say your agreement with them is for $50,000, you're really only able to capture, if we were to take 10% of $25,000, that's $2,500. So for each agreement that you have with a subrecipient, you can capture a maximum of $2,500 in indirect costs. Again, we're still making that subrecipient whole as they bill you, you bill HCD. We're paying for 100% of that cost. And then the $2,500 on top of that, just for the subaward, is really meant to cover your contract management overhead fees. Those items that are not MTDCs, such as equipment, capital expenditures, participant support costs, so like rental assistance, grantee rental costs, as well as the portion of each subaward that exceeds $25,000, are not eligible for that plus up. And I think that about does it for us today. And then you can rest easy knowing that if you didn't show up to work on Monday because you won the lotto on Friday, all the money can be accounted for. Somebody else can tell your story 5 years from now, because a record retention period is 5 years from grant closeout. And that's when HCD closes its grant out. So if you win even the lotto in the next 5 years and leave, let's say HUD comes out and monitors in 2029, this is how the next staff person should feel when they get that intent to monitor letter, so long as you're able to maintain that documentation. Any questions?
David, we did have a couple questions in the chat. If we want to start with Suzanne, is there a minimum amount that requires a procurement form? For example, a purchase of a ream of paper costing $48.
Any good or service. So there's no minimum amount in terms of when a procurement action would be triggered. Those caps or those thresholds that we had on one of those slides, so the 10,000, 250,000, are really about which method would be appropriate. So for a ream of paper, that's likely a recurring cost. You would likely need to kind of complete a micro purchase procurement and then have that documented.
Thanks, David. We have one more question from Richmond. Do subrecipients, oh, excuse me, my chat jumped. Do subrecipients need to provide GL matches for every invoice or only during closeout?
So just to make sure I understand, are you asking, like, at the time that you submit an RFF, do you need to submit a GL? Because I don't believe that's the case, but I'll allow our grant administrators to answer that before I eat my shoes.
Hi, David. In the ESG annual, we wouldn't request it as you stated it. It would be part of the mini monitoring or annual monitoring process. But I was the same as you. I wasn't quite sure of the how it was worded. But David did start out the conversation by saying that documentation is required for 100% reimbursements that you request for program expenditures. So that kind of a two answer there, but hopefully that covers it for you, Richmond.
Thank you. And Richmond, if you know who your GA is, feel free to reach out and follow up on that question for a more detailed response. Any other questions at this time? I know we are right at the hour. We'll pause just one more moment for questions and we'll close out. All right, I don't see any questions. So thank you all for all your questions. And thank you, David, for that wonderful presentation on a very complicated topic. And please let us know if you have feedback for future training sessions. And we will see you all next week. We hope you have a great rest of your week. Take care, everyone.
Have a good one.